that retest is the long RLC, and it's perfect. It's just absolutely perfect right there. And I've also added the trend line, and that hits that trend line almost perfectly. You add the stochastics RSI, you will see that on that test, you also have a stochastics RSI bottom. So what I'm showing you right here is you start with market structure. That's the foundation of any setup in any markets. Doesn't matter if it's stocks, commodities, forex, crypto, whatever. You start with market structure and you ask yourself, are you in an uptrend or are you in a downtrend or are you in a range? If you're in a range and you're a trend following trader, you're going to the next market. Let's say Bitcoin is in a range. Well, don't trade Bitcoin if you're a trend following trader. And you look at a coin like XRP, for example, and you look at the market structure, and you see it's a bullish market structure. You look for breakouts and pullbacks to breakout level, and all your indicators is going to tell you, like, I think a lot of people do this all wrong. Most people, they add the indicators and they look at the indicators to find the trade, right? But that's doing it backwards. What you should be doing is you should have price action and market structure front, right, and center. That should be your main priority and your main focus. The indicators are only there to tell you if what's happening in market structure has a slightly higher probability of playing out or not. So let's say, for example, if we get this dip, right? So we had the breakout level right here. That's the breakout level. And we had the retest right here. Now, what if the stochastics RSI on the 4-hour would be up here on this test, and the daily 20 and 50 would be up here, and the reload zone would be up here. So prices below the moving averages on the daily, it's below the reload zone. Stochastic is not giving me setup. Now that might tell you that this is not the retest to buy. But looking at market structure, it looks like a decent pullback, but all the indicators is telling you not to take that trade. So what you're doing basically is you're using market structure, looking at market structure, asking yourself, is it in trend and all that, and then adding the indicators to see if there's confluence with the indicators and the market structure. And that is how we got this setup, right? We had the market structure agreeing with, or I guess we had the indicators agreeing with market structure. And the reason why I did not buy down here, I instead decided to wait for a move higher, is because I wanted to have that reclaim of the 4-hour 20 EMA and the 4-hour 50 EMA and the 50% fib right here. That then activated my activated this setup right here. But like I said, if all of this would happen down here below all the moving averages and the reload zone and all that, I would not be taking the trade even if market structure told me to do so. All right, so we also have something called the fractal nature of market structure, right? So price action, it's very interesting because if you look at the, let's see, if you look at the weekly time frame, let's look at Bitcoin, right? So we look at Bitcoin right here and look at the weekly time frame. Clean Bitstamp. Let's go to another one. This is a very very bullish chart. Obviously, you have the uptrend right here. This obviously looks like a picture perfect uptrend almost, right? So that's one push to the upside, huge dump, another push, throw back to the breakout level, and another push that we're happening right now. And what I mean by price action being fractal is inside this move right here, you will have, like, this is one move on the weekly, right? So inside this move, you will have uptrends, downtrends, and ranges, right? So it's very important that to remember that the higher time frames always dictates the lower time frames, right? So if you're on the lower time frames, chances that the higher time frame will play out is obviously much higher than what's going on, like anything to happen in reverse, right? So if you look, if you're isolating this move right here, that's obviously an uptrend. So you might find a very nice short opportunity in a local downtrend on the 5 minute or the 15 minute, but you then have to understand that you're trading against the high time frame trend, right? So let's look at what happened here, right? So I think this is actually a very good example of what I talked about, and this is almost a picture perfect uptrend that leads to a distribution range, which leads to a downtrend, which leads to a accumulation range on Bitcoin. So you can see here that you have a push to the upside. Let's just say that this is one move, right? And you have a high, a low, a high, a low, and a higher high, and a higher low, a higher high. We're in an uptrend, right? Very nice uptrend. But then what we get here is the first major lower low and a lower high. So what do we have here? Well, I would say that this is a range, right? This area right here is obviously a range if you compare it to this move right here. And what happened here is quite obvious. We break down, obviously, and start a somewhat of a downtrend where you have a lower high. Let's call that a lower low. And it kind of goes on like that. It then turns into a range with equal highs and equal lows, right? And if you look at the 4-hour on this down move, you will see that on the daily, this down move right here is just one straight line to the downside pretty much. But if you look at the 4-hour, you isolate this one right here, it's a picture perfect downtrend almost like that. And what Bitcoin gives us right here is a perfect example of an uptrend turning into a range with a slightly bearish market structure that leads to a breakdown. So this is quite obviously a distribution range, right? And then what is this, right? You look at the weekly. You look at the weekly and you look at this and you're like, well, this actually looks like you have a low area, a high, and a higher low. So this could potentially be a accumulation range, right? If you break out and you retest that level and continue, obviously this would have been a accumulation range. You have a high time frame distribution range, accumulation range, and that's how it works, right? You have an uptrend, and at the high time frame higher highs and the higher lows, you will have a most likely a distribution range and an accumulation range where a lot of people are trading. A lot of people are trading that on the lower time frames, right? But the higher time frames, that they're just watching that as a higher high and a higher low. But on the lower time frames, people are watching that as a range, and then inside that range you have bigger trends and that kind of stuff, right? So let's see what actually happened here on Bitcoin. So go to the daily. So we have the range right here. We have a breakout. We get the start of a bullish market structure right here, and then we have a higher and higher low, and another breakout. Now this, when we saw this, I know most of you probably said, well, this is now the continuation of the uptrend, right? And you had a big move to the upside, and the trend was starting, right? So now you have an uptrend right here. So a range, distribution range, another range down here, which was a pretty clear after the fact. It's pretty clear that this was a accumulation range, right? Which led to a clear uptrend on the daily, right? So clear uptrend on the daily. This led this created the top here. And if you look at the 1 hour, let's see the 4 hour. You can see here that you have a pretty clear uptrend, which then breaks these lows and creates a downtrend, right? So again, you have an uptrend switching to downtrend. So if you're watching this from a market structure perspective, obviously when you had that dump right here and then that high right here, you now know that you're in a bearish market structure and you need to wait for proper confirmation before buying. And best case scenario, you have some type of range here and then a break and retest of that range. You have an uptrend, a downtrend, accumulation range, right? You will not always have ranges at the top and the bottoms. Like here, right here, you just had a big sell spike right here. You will not always have ranges, but that is best case scenario. So let's see what we get right here. Well, quite obvious what this is right here. Uptrend, downtrend, range, right? And a break above that range. And this would most likely be the start of a new uptrend. You have the high. And obviously that is the move that we're currently seeing right now. Now, I'm watching the 4 hour, and this is visible on the 4 hour, right? But looking at going back on the weekly, it all just looks like this. It all just looks like this, right? A uptrend with higher highs and higher lows. And this is a very clear local uptrend. So it's very important that you incorporate all like different time frames in your analysis and try to understand always like what's the high time frame market structure. Well, the high time frame market structure for Bitcoin right now is very, very bullish. So you should not be looking at shorting this market, in my opinion. And if the market structure is clearly bearish, you might want to look at shorts when if you enter a range, which could be a low time frame accumulation range. If you break that range to the downside, that might be an opportunity to start shorting, right? So if you're looking at the current price for Bitcoin right now, so we're testing those highs right here. And I'm seeing people saying like, well, maybe there's a short opportunity for Bitcoin because we have had this nice move, and maybe it's time to look for shorts because obviously a move like this can't be sustainable forever, so we might want to short this, right? Well, people probably thought about shorting Bitcoin when it broke above here, and people, I know a lot of people looked at shorting Bitcoin when it broke about 20K. And you might want to short this down to this level, but the risk to reward is just terrible. And there's no reason to short an uptrend, right? However, if Bitcoin breaks this level to the downside, right? So we come down like this, bearish reaction here, maybe then it might make sense to open up a short down to like the 40K region, right? And if we break the 40K region to the downside, we most likely have a pretty obvious bearish market structure, and that is when you could start looking at shorts down to this level. And of course, if you lose this whole level right here, well, then we're in a bear market, and that's when you look at only shorting basically. But right now you're in a bull market, an uptrend where you look for longs only, and you wouldn't really understand why you only want to long this if you haven't carefully looked at market structure and try to identify what price is doing on the higher time frames, right? So having that bias on the higher time frames will make it much easier for you to look at trades on the lower time frames, even on the 1 hour, right? So we have this in the back of our head. Market structure is extremely bullish, right? So do we want to short this? People might be looking at this, right? And they're like, well, I might want to be shorting this if we break this level to the downside. I might want to look at short like that. But then you zoom out and you're like, I thought about shorting here. I thought about shorting here. I thought about shorting here and here and here. And I'm thinking about shorting here as well, which might not be the best idea. However, looking at this, you might want to say, I might want to long here, and I might want to long here. I might want to long here. Maybe I want to long here as well because price is going up and the trend is to the upside, right? And then you look at you zoom out and look at the daily, and you look at the levels below. Like, where do we have obvious levels below? We'll have one right here. We have one right here. Then we have one right here. So we could look at the 1 hour once again, and we could say that if we bounce here, we would still be in a bullish market structure. If we bounce here, we would still be in a bullish market structure on the 1 hour. If we bounce here, we would still be in a very bullish market structure on the daily, right? So where do I want to potentially short? Well, if we break this level on a daily, well, maybe we want to start looking at shorts. But right now, the market structure and the whole market is extremely bullish. All right, guys. I hope this webinar kind of made you understand the importance of market structure, and especially the XRP example right here, where I kind of showed how you look at the overall market structure and you look for a break in the market structure. That's basically what you're doing, right? You're looking at a potential downtrend and you're asking yourself, like, what needs to happen for price to what needs to happen for me to see a bullish market structure and a bullish break in the market structure? And when you see that, you start adding the indicators and all that kind of stuff.